Welcome back to the channel, guys. There was a request in the Discord channel around reviewing ULTY, so the YieldMax ULTY fund. And so I put together my analysis around it. We're going to go through how the fund works, its distribution rates, its performance, a bit of an overview from the UK investor. I put that at the end because I recognize a proportion of people watching this potential video will be not from the UK as well that may be interested in ULTY. But there is a particular spin on the UK community, so I'm going to call that out as requested. So just as an overview for this fund, its current distribution rate is around about 85.48%. So I'm recording this on the 29th of July, so any data here is based on that. Obviously, this is a backward-looking rate based on the most recent distribution. It's not a total return, and it doesn't guarantee future results. It may include a return of capital, which could erode your principal, but we'll take a look at that a little bit later on. In terms of the fund's vitals, the official numbers, obviously its primary objective is to it's actively managed, writing synthetic cover calls on individual stocks to generate high income. It's got a fairly high net expense ratio of around 1.3%. It currently has a 0% 30-day SEC yield, and it started around about the 28th of Feb 2024. If we start to look at the portfolio itself, so inside the portfolio is a bunch of high volatile stocks. So that's a strategy. So ULTY strategy is to create synthetic cover call positions on a concentrate portfolio of around about 15 to 30 individual stocks. And then they select the kind of based on the high implied volatility. So the approach is to maximize the option premium collected and then distribute that income. And so if we look at this kind of chart here, we can see the sector allocation. And as you'd expect, it's 50% IT focused because that's a growth sector. And when you get growth, you also sometimes get volatility attached to that. What you'll also see is there's a 20% weighting towards the financials. We then have around 15% in comms, 72% in utils, and 6.3% in industrials. What you'll find is there's no consumer defensibles in here. So anything that's fairly stable in terms of its volatility won't show up in here. And that's to align to the strategy. So that's not uncommon to expect. Now, if we talk about the forward-looking, implied volatility is a forward-looking estimate of a stock's future price swings, and it's derived from the options prices themselves. So high IV of ULTY's income, the medium's around about 106.5%. So it's very high, and that's why we're seeing that high distribution number that we saw at the start. What's also important to look at is the historical volatility. So this is like measuring a stock's actual realized price movement over the past period. So it's almost looking backward looking, and it shows the kind of risk that's already occurred. And so the median historical volatility is around 64.5%. So, when we looked at that earlier number of the overall 85.48%, we can see it sits nicely in between that 106 number and the 64.5% number. Now, if we were to look at the constitution of this, we can actually see, if I just filter down on the implied volatility and we look at all the stocks that sit within this current set. Now, ULTY is unique in the sense that it can choose to drop things in and out depending on what's given the volatility. So this is obviously a snapshot in time, and this list may change over time, but we can see how the top one is at almost 210% and the bottom one is at 55%, and it ranges all the way up in between that. And what we can also see, even if we were to look at the historical volatility, it's still very high. It starts at 150%, bottoming out at 45%. So both the historic and employed volatility is very high across the board. When we look at the actual, and this again is based on the current underlyings, we can see that there is a whole mixed bag here in terms of some of these names that you might recognize, like Palantir, like Robinhood, like MicroStrategy, but there's probably a lot in here that people don't recognize. And that's the risk of potentially buying into ULTY. It's looking at volatility. It's not looking at business fundamentals or values of this stock. It's just looking at the momentum behind them. And so you just need to bear in mind that might be names in here that you may not believe in. So the target aim of what this is trying to do is purely income focused. And we can see that by some of the names listed here. And as I said, some of these names you probably never even heard of, I've never even heard of. Okay, if we look at the distribution side of things next, I want to bring this up because I think this is an important aspect because it's predominantly income focused. We can see this fund pays out on a weekly basis. So unlike some of the other funds, it's not paying out monthly, it's paying out weekly. Some of the other funds in the US are paying out technically weekly if you owned a basket of them. You've got this weekly recurring, but they're only paying technically monthly. This is genuinely paying weekly. And the other thing to notice is obviously this chart is quite all over the place. Now it is weekly. I've rolled up the weekly numbers into monthly numbers just so it's easier to visualize on screen. So we don't have too many bars here going on. But we can see how it is all a bit up and down. It's not very stable, but we expect that because it's following the volatility trends. And if we actually look at the distribution trend itself, it is in a bit of a downward trend at the moment. But it's important to understand why that is. And if we actually overlay the actual IV trend for all the stocks that are currently in here, we can kind of see that overlaying pattern here where there is a corresponding drop in the distributions based on the IV that's going on at that point in time. And we're currently in a bit of a low IV market right now. As a result of that, the distributions are also lower. So again, we've got to remember that this is a strategy around volatility. Distributions are going to move around based on that volatility. Very simple. In terms of the median distribution, I've just chucked that in around 0.3 there, just to show where the median currently sits. I prefer median over average, and I've explained that in other live streams and videos that I've done. But ultimately, you can see that this is very much a volatility play. If we were to look at the actual performance of the fund here as well, so if we were to look at just the pure price, it would look horrible, right? It'd be this continuous downward trend in the price movement. But again, when we look at these income generating covered calls, we don't look at just the share price, right? We look at genuine total returns. And if we were to bring the total returns into the mix, it's actually positive. And we can see over the length of its inception, it's been around about 7% in terms of its total returns, which again is not terrible, but it's not conducive of that 88% yield. So yield doesn't translate to total returns, and that's often what's missed with a lot of these funds. And if we were just to throw in a benchmark here, we can actually see there's 11% lost in terms of that performance over the same time period for the S&P, which is done closer to 20%. So again, it's not, designed for the best total returns. It may not be an index, but it's giving you that level of income. And if that's what you want and need, and that's part of your strategy, then obviously that's what it's trying to provide, is that income aspect to it. If we were to look at it from a UK investment stance, for UK residents, having ULTY remains difficult because it isn't really available or easily accessible to UK investors. There's no KID document under UK rules. US ETFs like ULTY can't be sold to retail investors typically because of that required standardization, that risk document. It can be accessible limited to professional clients, or there are complex kind of workarounds. Again, I don't want to go into the investment advice side of this, and you can join our Discord. There are plenty of people talking around these types of strategies, but it is quite difficult to get these. The other challenge is obviously the UK tax treatment side of things. Obviously, they're not available to the UK tax wrappers, so they're not available to ISAs or SIPs. So you have to bear in mind that the distributions, potentially if they're treated as income or dividends, you then need to think about the tax situation, and then the gains on that, again, the tax situation. So again, none of this is tax advice, none of this is investment advice, but you just need to go away and just understand for your own personal circumstances, how does this work out and how relevant is it? And how much does it eat into those gains as well? Again, I haven't gone into too much detail around that, but again, it's something to go and look at is, does these tax implications impact your total returns as well? And how much do they impact? And are you better off putting it somewhere else? Is there somewhere else in the market that will give you the same level of income or the same level of total returns that you require without having all of these kind of workarounds and these tax situations? So in kind of conclusion, It's a tactical tool for volatility. YieldMax is high risk. It's a specialized fund for kind of sophisticated investors aiming to generate that cash flow from the market volatility. It's not seen as a long-term capital growth fund, and you have to balance that risk-reward trade-off, and particularly if you're a UK investor in this fund. Now, the hope is obviously that this type of fund formally comes to the UK in some shape or form where you can then put it in that tax wrapper, but we're not currently there right now. So hopefully, guys, that gave you some element of an overview on my opinion on ULTY. Let me know in the comments whether you are investing in ULTY indirectly through these other methods. And hopefully for the guys that asked for this video, hopefully it gave you what you needed. Let me know in the comments as well. Thanks a lot, guys. I will catch you on the next one.